Good afternoon, my little shit weasels. How we doing? I will move on from that accent sometime in the near future. But it's too much fun, and I am way too tired to even try to come up with a different one at the current moment. Right. So if you recall in the last video, I said market rippy ? And that question mark was my hedge because that didn't fucking happen. Quite the opposite. One of the worst days in the market year to date, and from a stat that I read on the headline, it was the worst since June of 2020. So yeah, no, that was very unfortunate. Thankfully, I did not go into today with too many positions that would have caused concern. Yeah, kind of rough, if we take a look at where we sit currently on the SPY, we are catching at the second layer of accumulation, and that candle that we had actually doesn't look terrible. We caught the rest of the range going into the end of the day. So here's what's happening, right? My dissertation of it. The Fed is just going to keep crashing the stock market until bread is not so fucking expensive. So in the meantime, why am I saying that? Well, this is a constant ebb and flow between inflation and non-inflationary items. On top of that, in my opinion, I think like within the macro of the macro, the United States cannot afford to have its position as the world reserve currency fall from any form of position. And so I think this is just going to be a constant teeter-totter between market rips and market dips, which is what you would consider to be, a bear market and a bear market rally. But this is a different flavor of it because there has to be constant resurgence going on within the markets to keep people in the markets, but also to retain intrinsic value of anything that is appraised by the dollar. So with all that in mind, I think we're going to see a quick rebound. Sorry that I keep switching between scenes as frequently as I am, but I do think we're going to see a quick rebound because if the markets hang too low, then you risk a systemic sell-off. And again, that can't happen. I'm not trying to sound tinfoily about it, but the markets have to remain strong, especially going into midterms, and then soonly after that, you have the actual presidential election, which for those who are not in the States is a really big fucking deal for this stupid country. And so you're going to have both sides of the political spectrum either showing off as we saved the economy, which would be the presiding party, or that we have to save the economy, coming from the opposing party, relative to whoever is occupying the seat. So the economy has to sustain, and on top of that, the whole world reserve currency approach. If the U.S. loses that, that's when things are really going to be bad, and I don't think any of us are going to have time to look at charts. So, all right. As far as the technicals go, I'm going to pull up futures actually because this has a better representation of it. We're still catching on the weekly trigger. So we could see one more day where we clip this level of 392 down to 388, which would be a 2 to 4% decline, and then rebound in the shape of a W. Honestly, is how I see that unfolding. So every level of accumulation has just about been broken through on the SPY. So we're currently catching at the bottommost on the 30-minute, the 1 hour, below the 1 hour. We have a spot on the 4 hour down at 389, which is within that range of 392 to 388 that I was talking about. And then on the daily, we have room all the way down to 377, but that's typically, I don't want to say it's not in the cards, but this particular level is dormant at the moment. If you look at it going sideways, it is currently dormant. So let's take a look at Amy. Only down 4.9%. Not too bad. Not too bad considering how normal sell-offs occur with all Amy. Catching on the 4-hour of accumulation, and it honestly, again, looks like another form of reaccumulation and then a shot up. Sounds naive, sounds stupid, and perhaps pompous for me to keep saying it looks like it's going to go back up. I'm talking about the markets in general. Again, our markets cannot sustain these types of sell-offs so quickly, back to back, before it just completely falls apart. So it is catching on the 4-hour, which is huge. This has also been the same level of accumulation that we've been jumping through and then binding to and accumulating at. Throughout today, it looks good. It really fucking does look good. This potentially looks like a spring for the day. Obviously, you can see the sell-off from when the CPI print was reported. And on the 5-minute, going into the last second of after hours, it is pressing against distribution. So, fucking unreal. Jimbo, me boy, pretty much the same thing. Actually, no, it's not pressing into distribution. Interesting. Kind of looks like it wants to fall over and achieve a spring at this level. On the 4-hour, just below the uppermost 4-hour accumulation level. And then on the daily, yeah, still looking pretty all right. Yeah, still looks like it wants to squeeze on the 30-minute as well. So Tesla down 4%, catching accumulation on the 30-minute, just below distribution on the 4-hour. What the fuck was that? What was that wick? Huh. Interesting. Yeah, I don't know. This doesn't look too great. I don't like the amount of room it has off of distribution and with that rejection from earlier in the day. On the daily, it's catching the daily distribution. So this could be a spring. And this would just be one giant reaccumulation schematic. Perhaps, maybe, possibly, plausibly. Very interesting. Oops. The fuck? Amazon. Under accumulation on the daily. We have a 4-hour bearish volume alert. Not good. The 30-minute is clustered with accumulation. I don't know. I don't know about fucking old Bezos. This doesn't look good. This looks kind of heavy. Like even without the indicators, that looks kind of heavy. Like going all the way back here, it looks very top heavy, even now. Huh. Yeah, no real recovery throughout the day. I want to check out QQQ. Down 5.5%. Getting shoved down through accumulation as well. Yeah, that's some shit. That might have room all the way down to 280. Look at that rejection. Look at that fucking rejection right there. That's fucking incredible. And the second one. Yeah, obviously tech has been pretty inflated, to say the least, over the past couple of years. But still, yeah, falling through the weekly accumulation, that's some shit. That is some shit. Yep. Apple about to fall out of weekly distribution. Holy shit. Look at that fucking catch. Almost down to the penny. Jesus Christ. That's incredible. Yeah, so I still think we're in for a quick bounce. Like the phases of a bear market, obviously have a bear market rally within them. And I think the initial bear market rally will be faster than usual this time around. As well as just having like Q3 around the corner, or Q4, excuse me, and Q3 wrapping up. It's definitely setting up for a very interesting iteration of a bear market rally and that little micro phase of a bear market as a whole. So anyway, I'm gonna leave it at that. Love you fuckers. Thank you for all the love and the comments and the this is and that's. Given my most recent shot at this again. So we're gonna keep going with the daily uploads. I'm gonna go the fuck to bed. I finally have been fixing my sleep schedule. So stay black.